Everyone, welcome back to another weekly market outlook. This is for the 14th to the 18th of November 2022. My name is Vito and Henjoto, and let's get this started. So we'll recap what's been going on the previous week. We have a huge week. Last week we've got the US inflation cooling down a little bit. US year-on-year CPI posted 7.7%. Lower than the expected 8%, and a significant drop from the previous month's 8.2%. US year-on-year core CPI also posted 6.3%. That's lower than the expected 6.5%, and a drop from the previous month 6.6%. US month-on-month CPI posted 0.4%. That's lower than the expected 0.6%. US month-on-month core CPI also posted lower at 0.3%. Versus the expected 0.5%. We also have the UK quarterly GDP numbers shrinking for the third quarter by negative 0.2%. That's slightly better than the negative 0.5% forecast. The UK yearly GDP for the third quarter at 2.4%. That's versus the forecast of 2.1%, but a significant drop from the 4.4% the previous one. UK month-on-month GDP for the month of September comes in at negative 0.6%. That's below the negative 0.4% expectation. So overall, it is generally lower than the previous number, but slightly better than what the market was kind of expecting. All right, next up we have the key fundamentals for this week. What is there to watch out for? Obviously, we have the Japan's GDP numbers that's going to be out early this week. That's going to be followed up by the RBA meeting minutes. We also have UK and Australia employment numbers, and then we have the UK and Canadian inflation numbers. The key focus this week is definitely going to be the UK CPI numbers, as well as the UK autumn statement. That's going to be on the 17th of November 2022. Now, keep in mind, this has been pushed back twice. So we are expecting to see a lot coming out from the new UK government in terms of what their fiscal policy is. This is going to be market moving. Is it going to be positive for the sterling? It could be. Overall, we are expecting a little bit of a turnaround from the previous UK government in terms of their fiscal policy here. All right, so take a quick look on the dollar index here. This is a huge drop for the dollar index, and something that we have actually been waiting for. This is the first time that the index has actually closed below the Ichimoku cloud since January 2022. So following the CPI numbers, we have seen push below 109.50. That was the key level to keep an eye out for. On Monday at time of recording, the dollar index is actually pretty close to 106. Right now, in terms of momentum, we could see the dollar index push down a little bit lower, potentially towards 106, 105. So we'll keep an eye out on the dollar index here. But overall, this is a early indication of a potential change in the overall dollar strength. Next up, we have the 10-year Treasury yield. This one has also pushed down below 4%, so this is a good indication to go with the dollar index here, that we are looking at a generally weaker US dollar. At this point in time, we might see a little bit of a pullback down for the Treasury yield all the way down to 3.5%. This is for the 10-year Treasury yield. All right, quick look at gold. This one has broken through a lot of key resistances. Obviously, we have taken out the 1700, 1730 key resistance for gold. That was basically the July and September low. Right now, in terms of resistance, we are looking at August high resistance at around 1800, 1795. Now, if we have been following what's been going on with gold for the past 2 years, we do know that 1795 is a very significant key level for gold. Right now, that's going to be the main key resistance for gold in the near future. Okay, so here's the calendar for Monday. Pretty clear. We don't have any high impact news from for Monday. On Tuesday, we do have a lot of fundamentals coming out. We're going to start with the RBA monetary policy meeting minutes. That's one, and then we have the UK employment numbers, the claimant count change, as well as the unemployment rate. That's going to be the focus. We also have the US PPI numbers and the Empire State Manufacturing Index. But following last week's CPI number, doubt this one's going to create a huge impact in the market. Okay, so moving on to Wednesday, we have the UK CPI numbers. We are expecting a little bit of a jump in the year-on-year CPI numbers. Expected to come in at 10.5%. The core CPI also expected to jump up a little bit to 6.6%. We also have the Canadian CPI numbers. We are going to be looking at the TRIM CPI numbers. That's the core CPI number, expected to jump up to 5.3% from 5.2%. The monthly CPI numbers expected to jump up to 0.7% from 0.1%. All right. On Thursday, we have the Australian employment numbers, but the main focus for Thursday, it's going to be the UK autumn statement. That's basically their fiscal policy from the new UK government. We want to see what's going on with the changes in the tax cuts or the energy subsidies that the UK government was planning to gave out in October. That causes a lot of headaches in cable there. So if it's a reasonable fiscal policy that's going to be announced and it makes sense, it doesn't break the bank or anything like that, then we are likely going to be looking at a more stable sterling going forward in the future. All right. Other than that, on Friday, we don't really have much going on except for the UK retail sales number. So, key events is going to be on Wednesday and on Thursday. All right. Jumping on straight into technicals here. So we have the Australian dollar here. The weaker dollar in general has boosted the Australian dollar. Technically, the pair is yet to confirm any sign of trend reversal against the US dollar. The pair is currently testing major key level at 66.75 and 67 cents. Previously, this was the July and September support for the pair. Current resistance at this range is also aligned with the Ichimoku cloud resistance, as well as the daily 161.8% Fibonacci extension from the pullback earlier this month. So I expect the price to pull back a little bit and test support at 65 cents should it fails to overcome 67 cents in the next 2 days. All right, Euro USD. So this is actually really awesome. We have seen a technical change in the underlying trend noted and confirmed following the cooler US inflation numbers. The pair has moved past key resistance cluster between 1.01 and 1.0250. Immediate resistance for the pair is now located at 1.0350 with major key resistance at 1.05. Intraweek movement could be due for a slight correction with support around 1.02, where the weekly pivot is located, or all the way down to 1.01. A correction and bounce off state support would actually indicate and confirm a more sustainable uptrend in the Euro USD going forward towards the end of the year. Okay, with the Pound USD, we also basically have a confirmation of change in the underlying trend. That's basically, we bounced off last week's support level around 1.12. That's boosted by generally weak US dollar following the US inflation numbers last week. The pair has even managed to break through September's key resistance at 1.1750. UK CPI and the autumn report will likely contribute to more volatility in the market this week. For the trend change to be more sustainable in the long run, a short pullback towards 1.15 to 1.1450 is actually preferred. But ultimately, we are currently looking at the Pound USD moving back towards 1.2, where July and September support was previously located. Again, very similar with the Euro USD. This is actually the first time in 2022 that both Euro USD and the Pound USD has actually transitioned above the Ichimoku cloud. I think the last transition below the Ichimoku cloud was around January, February. That's very similar to when the dollar index was actually transitioning as well. Okay, I just wrap things up for the week. We have the dollar yen. So a quick note here with the dollar yen, this is actually very similar to the Australian dollar here. So the pair actually slipped past key supports, bypassing 145, 143, and 140 feet, and even 140, immediately following the cooler US inflation number. So very similar to the Aussie USD here. It has yet to confirm a change in the underlying trend, with major support trend line from June still holding strong, and price yet to break through the Ichimoku cloud. So we're keeping an eye out on this one here. We'll actually need a daily close below 138 to actually confirm the potential change in the underlying trend, with the next key support at 135. So an intra-week bounce towards 141.50 could be a possibility should the other major currencies like the Euro USD and the Pound USD actually retrace earlier this week. So like we note for the Euro USD and the Pound USD to have more of a sustainable trend going forward, we are looking at a little bit of a technical correction to happen. So if that technical correction happened, the Euro USD and the Pound USD, we are likely going to see that technical correction happen with the dollar yen here. So we do expect a possibility that there could be a bounce off the current support back to test resistance at 141.50. That could be in play for the dollar yen. All right, other than that, good luck with the trades, and I'll see you soon.